Welcome, 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 ladies and gentlemen. Today is Tuesday, October 7th. My first recap of October. We ended September, ended that challenge of the no trades, spoke about maybe further continuing this challenge into October due to the consecutive news days that we saw a couple weeks ago when we were looking as a forecast. Now, fast forward to today. I've moved apartments. The government's shut down. Prices still pushing all-time highs. What is going on? Bro, let me just show you news first. Without further ado. U.S. government data may be impacted by the shutdown. Tentative events are subject to delay. All right. So, yesterday, no news Monday. Upon Friday last week, ISM services. Thursday, nothing. Wednesday, this, but I think we were on the charts on that Tuesday. So, man, so the government shut down due to the could you call it a misunderstanding, or is it's more just a disagreement of two different parties under the same umbrella? That's crazy. So the Republicans were cutting a bill for, or were raising. Well, let me see as far as specifics, but how my understanding went was that the Democrats and the Republicans couldn't get the votes necessary in order to approve spending. And spending on what? I'm not really sure, but this is the first time that I've seen this upon upon the research that I've done over the last few months. And I'm surprised because as we saw the government shut down initially, as the news came out, I'm looking at the charts, and let me just say, what day did the government shut down? The government shut down it began on October 1st. So if I can show you on the charts, that will better explain it. It's currently 9:26 right now, so we got a little bit of time to recap this right before and then get on the charts immediately. But I still have more to explain regarding my personal plan. All right, so this was the first. Okay, so on the first, prior to the first, price was at this point where earlier in that week, price had made all-time highs and then started to fall on some relief. Price rallied, higher highs, higher lows, and then we start to see there's a 30th, price peaked and then started to fall. You get that reversal, and then price starts rising, and upon market open, price continues to push higher, push higher, push higher, and as you can see, it's a continuation of pushing higher. So what does this mean? This This means that there's more money being spent towards the market, even after all the news that's been going on. Not to mention there's FOMC tomorrow. I could show you on Forex Factory. So FOMC meeting minutes tomorrow. Fed's going to be talking. And this meeting is a meeting that is anticipated. So price could move sideways upon this meeting. I don't really know what will happen. But it's the only way I could explain right now is just a time to sit on your hands. And that's all I'm really seeing. I'm just trying to learn. So, with that being said, with myself now, I've moved apartments. I actually moved on the 30th. Today's the 7th. So I moved all this stuff on the 30th. Day before the 30th, I moved the couches with my brother and the bigger furniture in a U-Haul. And then that next day, I had to be out. I had to be out by the end of the day. So I think I got a later start to the moving that day. I ended up moving until like 6 in the morning. So I was doing like trips back and forth until like 6 in the morning. And then after that, because what day was the 30th? It was a Tuesday. So I was like, I recapped that day. Next day, we had these meetings. There were these meetings. And I didn't trade that day because I think I was sleeping. Next day, I think I was sleeping again. And then I just needed to take a break because my brain just felt melted after just fucking up my rhythm. So I've also been researching a different strategy that I'm not entirely sure if I'll bring it out to set it in stone as a strategy that I'm going to be working on. I'm practicing it, and I'm seeing if maybe I'm considering an option of alternating strategies, keeping my mind open. But as I'm doing these recaps, there's not really as far as the opportunity goes, I really just have been doing my best. So considering that new strategy, been working on it, back testing it, and I'll see if I'll bring it back up. But it's the trend line, using the trend line as your indicator. And it's just a different strategy. It relies less on like let's see, it's still systematic because you can't deviate from that. We need repeatable results. But it's pretty interesting because to me it really clicked. It just made sense. So let me bring up the charts right now. And prior to the strategy that I'm talking about, I've been using Orb and a 5-minute retest, 5-minute opening range, or 9:30 opening candle. The high and the low marked out of that candle. Oh, price is dropping. I also have an interview today. It's with a like a wealth advisory company, but it's not a commercial company. It's not a corporate behemoth. From London session into New York right now. It's currently 9:33. It's been uptrend, higher highs, higher lows, higher highs. But let me explain to you what the what this trend line thing that I'm talking about. What is that? It requires a top-down analysis, and what a top-down analysis is when you go all the way out to the monthly. Now on Tradeovate, it's not as convenient. It really isn't. Yeah, it's not. But I might have to pay the subscription on TradingView. So top-down analysis is when you go from the highest time frame, the long term, and you assess what is price currently doing and what is the current trend. And then you move down to the weekly. Repeat the same process. Cleaning, you're basically combing price. Just getting the knots out to understand what am I looking at. And it's by using lines. So I would connect from point here, likely to point here to point here, and it's a ray. So connect these at point A to point B, and then you have a line that goes out. And if I continue to do this on the higher time frame, you really start to get an idea of where is price headed in. For the S&P 500, I don't think it would. I mean, it's pretty obvious that price has been moving in an uptrend to the upside, but it also allows you to get a better entry. Say price breaks, trend breaks, downside through a retest confirmation and an overall higher time frame bias. Like right now, you could put a line here from point here. Say this candle closes down here. You would put a point. You'd put a line down from here. Since the overall trend has been going up, wait for price to close above that line. Price will come back in, and then you would enter as it comes out. Very similar to the way that it really is. What I've started to understand is the fact that regardless of the strategy that people are using, they're really just speaking the same, they're saying the same words, just in a different language. What I mean by that is the fact that a liquidity sweep, break of structure, fair value gap, and enter on the 5-minute candle closure outside of that fair value gap is pretty similar. And that's TJR strategy. And that's pretty similar to the current, or to what I just had mentioned. And what you're waiting for there is for a reversal. And what a reversal is when price is making it lower lows, lower highs, and then you see relatively equal low candle closure. It can also vary if prices opens higher and there is bigger distance, and if it's not equal low candle closure. There are times where that happens. No moment in the market is perfect, or all moments in the market are perfect, I guess, and they're all unique. But then you see price break structure to the upside, and what a break of structure to the upside is when you see price close above the most recent high. When price closes above the most recent low, price broke structure to the upside. And why this is a liquidity sweep is because price is making downtrend, lower lows, lower highs, lower lows, reversal. Oh no, it might get loud. Yeah, it might get loud, bro. The landscaping services are here, bro. And they were here yesterday too, bro. Fuck. This shit's about to be loud. Alright. It's currently 9:40. So, as I mentioned, liquidity sweep is when price is making a downtrend. Reverses being flips direction. Fair value gap is when price makes that surge to the upside on one candle, leaving an imbalance. Price typically fills this imbalance before moving higher, depending on the setup. Similar to this. This was a higher time frame fair value gap. You see here on the 15-minute fair value gap right here, as well as right here, filled this fair value gap. And then, as you can see, it's reacting off of it. So you would enter on the 5-minute candle closure to the upside. The next strategy that I have been using, price is at 6,800. Damn, that's crazy. Like we said, it's gonna get loud, but we gotta do what you gotta do. Okay, so current strategy is the 15-minute 9:30 candle. Mark out the high. There's about 3 minutes until this candle closes, which it is this candle. It's this 9:30 candle. You mark out the low, you mark out the high, and you wait. You wait for a candle to exit orb. Don't enter on the first exit because it could be manipulation, where you see the candle goes higher outside of this opening range and then could come right back down, and you wait for that retracement. So price comes out, comes back down, and then you wait for a 5-minute candle closure outside of this opening range. You're also focused on volume increasing towards that direction. The fact that we're at this price range and we have, and there, the fact that prices at this range during the government being shut down and FOMC tomorrow, it's like I said, a time to just sit on your hands. Nobody really knows what's going to ever happen next, but some have better idea than others. And in this time, it's like, I don't really know as far as anticipation goes. I hopped on yesterday. And I'm starting to realize something is that so I applied for this I applied for this job. And my goal with this, I already have a job. I bus tables at a restaurant and I get paid fine. Scheduled a couple days a week. It's not really in season right now. And I applied for another job because I'm looking for I'm allowing my mind to be flexible upon careers. Although ideally this is the train that I'd like to take towards freedom. It's not really working out in the way that I initially thought because you need to 10x your expectations, including your time expectations. I'm gonna have to wait a lot longer, and by getting another job, I'm still on the days where where trading doesn't feel as productive, and I'd likely like to get into long-term trading as well, swing trading, by the way, as my capital grows. But gaining capital is my reason right now, because if I can remove some pressure in a different area that is just 1% better towards my game, towards my strategy, and maybe there's something for me to learn out there. So I'm leaning into it and I'm enjoying what's in front of me, regardless of the object at hand. I'm enjoying it. And I see too the fact that I have made this distinction, that I can put it into words and articulate the current feeling that I have. It shows that I'm already in a different position than I was before. And to put pressure, put stress on the outcome, on whatever's next, is exhausting. And it doesn't really add up to anything on the board other than stress and pressure. I'm going to get the job done anyways. It's going to look good. And like Chris Williams said, you still have the same feet you did 20 years ago. You still have the same brain. Chris Williamson. So you just got to let go. Be kinder to yourself. To me, it would make sense for price to move sideways upon FOMC meetings tomorrow. And I'm thinking, why is price pushing all-time highs? And it just makes sense to the AI boom. It's brought a considerably more. That's like, it's brought a lot more money into the market under AI. But also, I thought about something. What makes peaks in the market is when people keep buying even though prices at all-time highs. So I'm just watching out. What I'm focused on right now, I'm going to clean up my place. Take what's inside the boxes out of the boxes. Free up my living room. Free up the living room. That's how I'm feeling. And regarding careers, to what I was thinking about, even with this internship, is that to be a fiduciary advisor, and the opposite of a fiduciary advisor, or the counterpart to a fiduciary advisor, is a broker, a stockbroker, or like a broker who's trying to sell you a package. So let's start it from the top. What is a fiduciary advisor, and what the fuck am I talking about? So a fiduciary advisor, let's just say you have a lump sum of cash. You've been working and you don't really know what to do with your money, so you just keep saving it because they told you so. And why would you not want financial security? So you have some money saved up and you want to put it somewhere. You hear people talk about the markets, real estate, gold, and you want to know that your money is protected. You want to know that your money is with someone who is providing you information upon your best interest towards your goal that you have for yourself. So, a fiduciary advisor, by law, is required to produce or to provide information that is towards your best interest, provide you financial information, financial advice towards your best interest. And what a broker would do is if you go to a broker, stockbroker, asking them, hey, where should I put my money? And they say, hey, we have these packages for you where you can invest in X, all these things. And this package of stocks, and we guarantee you this percent. But then you say, well, what are the fees? And they say, well, there's this fee. But then you look through the fine lines, and there are numerous fees upon a brokerage house, brokerage firm. Fees that are unnecessary. Fees that go towards, so what a brokerage house will profit off of, not only will they profit off of a percentage of your winnings, but also they require money up front, and you're paying this money. You're paying this money regardless of price going up or price going down. And it's not necessarily secure as much as it could be in different hands. And what this means is that with a package that you might purchase, there might not be much adjustment tailored to you and your desires. So, and at times, say the market's shut down or the government shut down, and even if the market, hypothetically, say the market's falling, a fiduciary advisor may protect your funds by putting it into a different, either they're going to do their best job to protect your funds, because like I said, by law, their motivation is for your best interest, and they get paid like a lesser percent than you would be paying a brokerage firm. And you know where your money is going when you're paying the fiduciary advisor. It just, to me, it sounded like, as a brokerage firm, we're joining one of those big houses and selling a package. It seems, it's what the market gets, that poor, what's it called? That poor stereotype. So then, yeah, like a slimy, grimy guy trying to just sell you a package, and you don't even know if what you're buying, if what they're putting your money into is for your best interest. It could be for their best interest too. And okay, the biggest kicker here that I forgot to add is the fact that a fiduciary advisor can write down on a paper and has a commitment to you that they are not involved in the financial proceedings. Like, they're not involved in the same stocks as you. They can't have that conflicted interest legally, whereas a brokerage firm can take that information from you and use it towards even their best interest. So you don't know what you're buying. It's going versus the butcher. It's the butcher versus the dietitian. The butcher recommends you meat. You go to the butcher for steaks, glizzies. But you go to the fiduciary advisor, the dietitian, and they're going to recommend you fish if it's best for you, even if it's not good for them, even if they don't eat it, or they won't eat it, or they have a bias to it. They're going to recommend it to you if it is in your best interest. If I would have told you that, the butcher versus the dietitian initially, the story would have been ended a little bit earlier. Sideways movement. And when you see consecutive 1 minute candle closures or consecutive candle closures with inside of orb, that tells you that either A, price will be moving sideways, or B, you get a bigger move than expected. And C, really anything can happen, which is possible, absolutely. But FOMC meetings tomorrow where the Fed speaks, will he cut rates again? I don't know. With all that's going on, with what is going on with the government being shut down, I'm not really sure what to expect here from the Fed. So, and they are independent, allegedly independent. It's not even going to be that loud. That's tough. Yeah. Honestly, that takes the cake, y'all boys. That is my recap of the market. Now I gotta go to Google Sheets, recap the perfect trader, but sideways. Suck me sideways. All right, y'all boys. I want to expand my time horizon being like, we got to think in terms of 10 years. Work my years off. Whatever's moving forward, do my best. But within the next 10 years. Government shut down on October 1st. All right. Government shut down on October 1st. Today's not the 3rd, it's the 6th. Damn. Consolidation. Made all-time highs yesterday. Or Tuesday. Today. Yeah, they hit all-time highs today. Pre-market. Interviews at 11:30. Let's go. Oh, price is breaking orb. This candle closes in 1 minute. So you see how if we had done trend lines, connecting these lines together, as price closes below here, likely this point, you'd enter shorts. It would look like this. Upon this candle closure, enter shorts because price came down, retrace back up, close back down, enter shorts. I'm going to continue practicing that strategy. The government shut down. The public starting to reject the government, starting to reject what's going on. You got Joe Rogan, Theo Vaughn, who else? Uh, Disagreeing with what's going on with what even is this? But I remember someone speaking. It might have been Ray Dalio speaking about how there's these cycles where the government shut down, and then the people start to reject the government, and then low unemployment and overconfidence lead to excessive optimism right before a downturn. This refers to the idea that a recession could begin with the financial system and government institutions rather than starting with a more typical economic slowdown among consumers and businesses. Institutional breakdown is what's going on. Trump says the U.S. can grow its way out of $37 trillion in debt. Okay, so what I'm looking at. So Badalio has studied dozens of major debt cycles, wrote in his 2018 Principles for Navigating Bit Debt Crises that during booms, lending supports spending and investment. So Trump has suggested the government could use tariff revenue to send Americans distributions of up to $2,000, which would go into consumers' pockets instead of helping to budget deficits. Temporarily pushing growth above the consistent productivity growth of the economy, but that can't last. Eventually, income will fall below the cost of loans. Elsewhere, debt burdens only ease when nominal income growth is higher than nominal interest rates, but too much stimulus risks unacceptable inflation and currency declines. Spend more, borrow more, and take on greater risks. In the first stage of the bubble, debt rises faster than incomes. Borrowers feel rich, so they spend more than they earn and buy assets at high prices with leverage, like taking out a loan to buy a house, taking out a loan to buy Bitcoin at all time highs. Debt is growing faster than the underlying economy. So the economy from about 100% of GDP in 2025 to 118% by 2035. Too much stimulus and you spark inflation or currency weakness. Too much austerity and you trigger a recession. The kind of permanent tax cut and tariff driven stimulus Trump is promising doesn't fit easily into that balance. Dalio also warns that most misleading signals come near the top, where easy credit boosts spending and asset prices climb, unemployment falls. Today, asset prices are at or near record highs. Unemployment remains low. When the limits of debt growing relative to income growth are reached, Dalio wrote, the process works in reverse. Vicious self-reinforcing contraction. ChatGPT. looking at this company, ASML. They're currently worth so price per share is $1,039. Market cap is 410 billion, so it's a large market cap. But its EBITDA value is it's 27%. When a often healthy EBITDA value is a margin above 10%. So 27% is strong. NVIDIA's EBITDA margin is approximately 59.5% to 66%. Damn. AMD's EBITDA margin is 18 to 21%. All right. I have recapped this trade. Telling you that the trend line would work today. Be a profitable day for today. But I don't want to be someone who says would or should or could. I want to do it. So I'm working on it. Right. I finished. I'm gonna catch y'all boys later.